Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business, and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com. Hello and welcome to the RIA Edge podcast. This is Bruno, the managing director of the wealth management group at Informa Connect, and I am incredibly excited for today's very special guest, Brian Hamburger. Brian is the founder, president, and CEO of MarketCounsel Consulting and the Hamburger Law Firm. One of the most well-known people in the space, one of the smartest people in the space, and one of my favorite people to talk to in the wealth management industry. So Brian, thank you very much for being here today. I appreciate it.
Hey, thanks for having me, Mark. You know, it can only go downhill from that intro.
It just might.
It might.
You never, I honestly, I couldn't think of a better person and a better for the discussion that we're going to have here today on the RIA Edge podcast. We have, for the better part of the last year, had essentially CEOs of large RIA firms, very fast growing RIA firms on the RIA Edge podcast. And we've started to transition to bring in people who are consultants, experts with much broader views across not just one firm, but obviously hundreds and in some cases thousands of firms. And over the last couple of months, we've had more and more conversations just around this battle for talent. And there was always obviously a high level of competition in the talent in the RIA channel for talent, but it seems like it's at an all-time high right now. And Brian, I'm very much looking forward to getting your point of view and your perspective on what's driving that. But before we do, while you are very well known, would you take a minute just to orient our listeners, those who may not be familiar with MarketCounsel and the Hamburger Law Firm, and talk a little bit about how you're specifically working with RIAs and other types of firms within the wealth management industry?
Sure, Mark. It's always easier to talk about myself and the work that we're doing here. For the last 22 years, our anniversary was just recently in the beginning of this month. For 22 years, we've been working within the independent wealth management space, working with existing or would-be independent wealth management firms and other investment advisors on all sorts of issues throughout their entire life cycle, everything from considering the startup of a new RIA to going forth with a full-scale business launch, to growth-related and protection-related issues such as succession, eventual M&A, and of course, any type of disputes or risk mitigation measures along the way. Then we have an affiliated consulting firm sitting next to our law firm called MarketCounsel Consulting, where we work with firms and help them manage their ongoing regulatory compliance. And as you know, Mark, we also run an entity called MarketCounsel Productions that's well known for hosting the kind of the seminal event come year end for independent wealth management firms, their service providers, and leading journalists to assemble and get together before we all break for the holiday season.
And it is one of the top conferences in the industry. I am very happy to say I've been to many, participated in several, and look forward to it every year. So looking forward to it at the end of this year as well. But let's get right into it, right? Yeah, of course. So I mentioned before just the level of competition for talent. I personally think, and a lot of other people think, it's at an all-time high in the history of the industry, but would love to get your take. So where do you think we are now? How would you describe the level of competition, and what are some of the unique driving forces behind it?
Well, so by all measures, the overall labor market is tight, but no one needs me to tell them that. I mean, earlier this morning, I saw that private sector increased their payrolls by 500,000 new jobs. But there are some frothy trends within that overall. Staff are really looking to participate in the current economy, right? It's not just business owners who are looking at these numbers, but they're looking at the current economy in, I think, really two headline issues. One is wages, and the second is work environments. And sometimes employees feel that they need to change their employment to change their employment. And as an employer, I'd like to think that that's not universally true, but it seems to be one that is a view that is widely held. What's more interesting, however, are the dynamics that are occurring within the executive ranks and the management teams within RIAs. Independent firms within the RIA space finally have both the will and the way to attract experienced talent from some of the largest blue chip financial institutions out there. And for them, pivoting their skills to succeed in a smaller organization is really going to determine whether they can add value that they need to be successful. It's really a different environment altogether, one with far less resources, probably a lot less support than they're used to, a greater focus on personal accountability. And we've seen some really well-educated, credentialed, and highly experienced professionals just fall flat in a more entrepreneurial environment. And others have taken to it as if they were just natural fits. So I think we're seeing a lot of dueling forces within what undoubtedly is a very tight labor market, depending upon what level of employment we want to hone in on.
So just an interesting point that I wanted to pick up on for a second. You're seeing, because there's been this idea that there's a talent shortage in the wealth management space for years. You're actually seeing from other parts of the financial services sector, talent coming into the wealth management industry.
Sure. So, take a look at business development organizations, sales, look at marketing, take a look at heads of product at large firms, and they're being recruited to the executive ranks of these independent firms, primarily acquirers and roll-ups who are looking to really build a substantial and scalable platform. They're significantly smaller than the firms that they are hiring away from, and that's a trend that seems to be accelerating over the last couple of years.
I've seen bits and pieces of that, so I'm glad that you mentioned it, because it's always tempting to want to draw attention to something you think is a trend before it's a trend. But I've definitely seen people, and you mentioned the roll-ups. That actually leads me to my next question. I've seen people coming into the industry from whether it's investment banking, or trading, and filling some of those types of roles, especially on the sales, marketing, business development side. So that actually sort of leads right into the next question I have for you. We've talked about a lot of the M&A activity that has really reshaped and is redefining the RIA industry on this podcast. I'm curious, from your perspective, what role talent acquisition is now playing in some of the M&A activity that is taking place in 2022 and some of the activity that may take place across the remainder of this year.
Oh, wow. Well, I will, maybe this is a bold statement, but I would say that most outright acquisitions are actually being fueled primarily by the drive to acquire talent. The revenue streams that they're acquiring have really become a substantiating factor and have led to some of the valuations. But a lot of the acquisitions we're seeing out there, when we really sit down and talk about their thesis for the acquisition, they talk about the opportunity to pick up several talented people all in one shot. Taking the trend a bit further, rising wages, declining revenues, right? Revenues that are tied to maybe a declining market are compressing margins, and therefore they are having a negative impact on valuations. But of course, demand remains really strong for high quality targets, so that's having an offsetting effect. So we're seeing the net valuation of these firms remain strong, even though the components that comprise them are different. And the last thing I'd say, Mark, is I think the market's definition of an attractive target has shifted over the last decade or so. Acquirers are less interested in well-run firms that are hitting certain benchmarks. They're far more interested in the underlying talent, specifically the talent for attracting and retaining new business and clients specifically. That seems to be at a shortage and is really what's driving a lot of the M&A activity in the space. And that wasn't the case 10 years ago.
No, it's completely different. You saw 10 years ago, even 3 or 4 years ago, the acquisition was driven by succession, and it was driven by growth. It's just add assets to the platform. If you got talent, that was just sort of a bonus. Right now, I've had several people say to me on this podcast, and a number of other people agree with the statement that it's easier to acquire talent than it is to hire talent right now.
That's right.
I really appreciate your perspective on this, and I don't think it's a bold statement at all. I actually would like to dig into that. If you're seeing as much acquisition as we've seen, there's also obviously a lot of recruiting that's going on. It doesn't necessarily always involve a straight acquisition of another firm. It could be just picking up a team. You have so much exposure to things that go right and things that go wrong. I am curious, when you look at the firms that are the most effective at acquiring and retaining talent, what are they doing right? And of course, on the other end of the spectrum, what are the firms doing wrong when they're not successful in hiring or keeping their best people?
That's a really interesting question. What I've noticed is that the best firms out there aren't taking this challenge head on. They're really looking for alternatives to full-time human capital as the fuel that they're using to grow their firm. So they're looking at resources such as outside independent contractors, outsourced service providers, technology automation, all to make their employees more productive, more efficient, and more valuable. On the other end of the spectrum, you have firms continuing to hire and pay market rates. They're increasing their physical space allocation and they're shifting budgets away from other resources. But if the pandemic has left any lasting lesson on business, it's that the ability of a small business to harness its nimbleness and really embrace change management is going to be far more impactful than whatever the challenges we're facing on any particular day.
Yeah, it's an incredibly unique time right now. You mentioned before, just at the executive level, some of the talent that's coming in. I think if you're somebody who's been in the RIA industry for a while and you've grown your firm, you've doubled, maybe tripled, quadrupled in size, you've added talent, you've made acquisition. It is an unbelievable and an unbelievably complicated time to be the leader of an RIA firm. I'm sure you run into that every single day. And hopefully listening to podcasts like this, that's who we're connecting with. And that's who I hope, we're providing some really strong direction, education, and guidance to.
Because Mark, there used to just be a couple levers to pull, right? I mean, there wasn't an awful lot of inputs and outputs to a service business, such as running a small to mid-sized wealth management firm, but now the calculation has gotten infinitely more complex. Here we're talking about, well, how to address rising wages. Well, one of the methods is not to deal with the wages at all, but rather to turn your resources away from human capital and look to other ways in which to make the existing people you have there more valuable, and which is really interesting when you see it in motion. And I think that for some people, change just comes naturally. For other people, it is incredibly uncomfortable. And over the course of the last couple of years, we have seen the shift of good fortune tilt towards those who can embrace change and really be very, very nimble with respect to all of these inputs and not behave in the manner that simply society expects them to or their clients expect them to, but really just be open to looking at things differently.
Yeah, I appreciate your comments there as well, because I think you've seen so many people over the last several years who have had to make a choice. Do I want to continue to advise? Do I want to manage money? Or do I really want to be a professional manager? And the things that made you successful in this space are not necessarily the things that would always make you successful as a professional manager. I think the RIA channel in general has gone through an amazing period of professionalization, and it still is. And I think your firm has probably had a lot to do with that behind the scenes. But I do want to make sure, we've touched on wages a little bit, but I wanted to spend a minute, maybe getting into a little bit more detail there. I used to obviously do the benchmarking study looking at compensation and staffing. Haven't done it in a couple of years. I feel a little far removed from what's going on, but it wasn't that long ago that we saw base and incentive packages for advisors, right? Not just the CEOs and the managing partners, but lead advisors were going through the roof. I'm curious, with all this competition for talent, what's going on right now. So how do you think the competition has influenced not just compensation levels, but the structure of compensation plans for advisors and key individuals within RIA firms?
Well, rising wages and overall human capital expenses, as we mentioned before, are decreasing net profits. And so firms are allocating higher wages towards recruiting, but then they're immediately facing similar challenges for the retention of talent, right? It's as if they didn't realize that what they were going out there marketing for and advertising, that their existing employees weren't going to ask for something similar.
That's the right side.
Yeah, we're seeing a lot less discussion, strangely. Yeah, I'm always a student as to what we're not hearing, right? The absence of of some of the speaking points, and we're seeing a lot less discussion about equity, about career path, and culture, as really employees are shifting resources to address inflationary wage pressures, and younger generations seem less attracted by this employer provided lifestyle and future promises, right? When we look out at these younger employees, they're infinitely clearer about their boundaries and their drive for balance in their life. They're looking for a workplace environment where they can learn, get paid, and really unplug from when they're off duty. Which is a really stark difference in what we've seen a few years ago. And you combine that with falling revenues from declining markets, you got a bit of a storm at the moment, which is why there's so much attention in this area, right? It used to be you can go to a younger, inexperienced group of talent and lure them with promises of a career path, with promises of riches at the end of the rainbow. But these new entrants are saying, well, that's all well and fine, but I need you to pay me now. And it's created a very interesting dynamic, I think.
Yeah, it feeds right into almost the sympathy I have for the professional managers that we've been talking about. I want to get paid really well. I want to be able to go dark when I want to go dark, right? And I want to get paid right now.
That's right.
It is not an easy environment, but I completely understand the way you've described the landscape here. There isn't a tremendous amount of talent available. You do need, if you've been growing year after year after year, to maintain similar growth rates, right? Even in a market where even where equity markets won't provide. So it is definitely a completely different industry than it was in the beginning of the year in many respects. And certainly, from where we were a year ago when we first launched the RIA Edge podcast. I do want to end on the subject of M&A. We've talked about M&A activity quite a bit on this show. But I would like to kind of get into some aspects of it that nobody ever really talks about. So we know that there is a headline just about every day about a new deal in the RIA industry, right? It's been that way for several years, but we very rarely hear about what happens after the close. With a couple of years behind us now and hundreds of deals that have closed, I'd love to get your take on one sort of really simple question. How successful are most of these deals? And if they're successful, what makes them successful? And if they're not, what typically goes wrong?
Well, we could do an entire session at a conference. Oh, we'll probably spend an entire day.
We might on this.
Might. And I know we don't have that much tape in the reel, but listen, I can't wash this answer with just a really broad response because it really does depend.
Sure.
Too many deals are being fueled by record valuations, and not because it comports with the founder's vision. They're coming to us because they're reading the headlines, they're reading the M&A reports, and they're saying, well, I want part of that. And it often leaves me scratching my head because I say, well, we just talked about this a couple of years ago, and you told me about your long-term vision and your plans, and you told me about your eventual internal succession. It just doesn't seem to jive. Unfortunately, too many sales in the wealth management space are still driven by some type of immediate need, right? It's the immediate declining health. It's a promise that the founder may have made to their spouse, or just a sudden distaste for management and supervision that they just want to get, they want to free themselves from. And so too many of these decisions are being made far too quickly, not part of a plan that positions them to sell at maximum value and then continue to drive value to that organization. You also have a lot of minority investments that are going on that on the whole are quite frankly going really badly. They're selling a sliver of their firm. They're often giving up far more control than what they sold. There are often a lot of conditions and handcuffs. and they're quite limited as to the market for the remainder of the firm that they didn't sell, right? So it's often that the acquirer of the minority position maybe has first look or right of first refusal, which just on its own is going to preclude others from participating in a bidding process. And you've got this. You also have the outright acquisitions of firms where the founder was really only an entrepreneur because when they became an RIA, they couldn't find a suitable home. And the space has grown since then, right? We talk about 10 years, but go back even 20 years. The space has grown since then. There are far more options now, and that may have changed. Those are going well, right? When we have these outright acquisitions, typically experienced acquirers are coming in. They focus not only on the deal, but making sure that they get integration correct. That those deals on the whole are going better than one would probably expect. It's the minority deals that tend to regularly go sideways, or the ones that are sudden decisions by the founder to go ahead and sell without much of a runway and without much of a plan.
Yeah, it's very true that you and I could probably do an entire session at a conference or a workshop on this, and we just might at some point. But
okay.
I couldn't agree more with what you were saying just around the immediacy. It'll be interesting to see how the rest of this year plays out too. Not that deals get done overnight, right? They obviously take months in many cases. But with the markets dropping, I'm hearing that there are a number of firms that are actually looking to sell because they don't want to feel like they've missed out, right, on some of the incredibly high valuations, right, that have defined M&A activity for the last several years.
Yeah, but here's the unfortunate thing, Mark. The unfortunate thing is, you will be peppered with those that have successful or what appear to be successful deals. No one who has executed on an unsuccessful deal or one that they're not satisfied with, no one wants to talk about that, right? It's this dirty little secret, right? No one issues press releases to say how poorly this integration is going or how they regret, selling a small portion of their firm a few years ago because now suddenly they can't hire their son or they can't change their office space because there's these conditions or, you name it, right? We've got, we have 26 different conditions that we just took out of a recent contract for a minority investor who was trying to effectively take control over the firm. We could probably do a workshop on this, but that's for another day.
Yeah. And also, I think we could probably put together a decent press release on April 1st, right? About an announcement of an unsuccessful deal. I love that. So I'll come back to you on that. But Brian, thank you very much for stopping by the RIA Edge podcast here today. I think we touched on some really important subjects that we don't talk about enough. We do talk about M&A all the time, but to get your take on the battle for talent, what you can do to win, right? What you can do to lose is really, really important. It's critical information. We appreciate you spending some time with us and our audience here today.
Thanks so much for having me, Mark. It's always a pleasure to stop by.
All right. Well, Brian, again, we appreciate you sharing all of your thoughts and perspective with me and with the RIA Edge audience. And on behalf of the entire team at wealthmanagement.com and at Informa, I'm Mark Bruno. Thank you very much to everybody for listening here today. And we look forward to having you all back on the next episode of the RIA Edge podcast. Take care. Schwab Advisor Services is proud to support the RIA Edge podcast and equally proud to support independent financial advisors like you. In a challenging year, how did 68% of firms surveyed in Schwab's RIA benchmarking study meet or exceed their new client goals? By following key success factors such as leveraging new technology, adapting strategies to win new business and stay connected with their clients, while also attracting and developing the right talent. The Schwab RIA benchmarking study is just one of many ways they provide you with the insights and resources needed to succeed and grow. Get the full picture at advisorservices.schwab.com.